Good day, everyone. Thank you for joining us once again here at Seafood and Brew for our economic briefing. I believe we have entered the panic zone. That is what's happening in the market. People are panicking, and it's sell what you can, not just what you want to. And that's why we're seeing the markets have these tremendous reactions. Yesterday, we saw the 10-year Treasury move up, back up into the 0.8 range. That's right. It's scary to say that we can comment about the 10-year Treasury moving up to that 0.8 range. However, this morning we see that in the opposite direction, moving back down. Overall, when you look at the Treasury at this moment, we can see the 10-year Treasury moving back down to 0.68, most likely going to head back down below 0.5. And we see the overall yield curve here with the 3-month at 25 basis points and that 2-year at 38 basis points. It is amazing when we start to look at the changes, these 1-month changes in excess of 100 basis points on that downward. Not only that, we look at the futures market this morning and notice here we are already off 1,200 points on the Dow and at 139 points on the S&P. These are erratic movements, and we're going to see the market open up significantly down. The question is, where will we hit that circuit breaker once again this week, causing the market to suspend trading for 15 minutes. That being said, the ECB comes out this morning looking to lower rates as well as put in some regulations that will help lenders over there create loans and help support that system. They will be pouring more liquidity into the market. Off of that, the question is, what will the Fed do? Not so much next week. We know they're going to move next week in terms of the U.S. Fed, but will they have a reaction this week in terms of lowering the rate again in a special rate cut or putting out there additional liquidity measures? It is amazing when you look at the changes in the Fed funds implied probabilities. This is from the 2nd of March, the beginning of this month, and this is from this morning. Notice these numbers up here. There's a 100% chance of a rate cut. We've known that, but look at that where the numbers are 25 to 50 basis points. That is a 55.4% probability. That means a significant rate cut coming either this week still, even though we have 2 more days left in this week, or next week at the official meeting. These are substantial changes looking to get down to that zero bound once again. We have to think about how this is going to impact the overall pricing of our deposits and loans, and we've said this before. The impact will be a quickly reducing yield on earning assets as those prepayments come about, as these adjustable rate mortgages and loans come in and adjust at historical low rates. We need to be able to reduce down that deposit pricing at the same moment. But the question is, will you be able to reduce it down enough? Of course, there's a much bigger range for the yielding earning assets to move down compared to where the cost of funds are, and that is just going to create that margin compression throughout 2020 into 2021, as well as the potential for the credit issues that might be creeping up because of the slowing economy. And now we are looking at many economists projecting a negative GDP growth rate. That's right, a contraction in the second quarter of 2020. All the numbers that we're going to be looking at that are coming out for the economy, all those economic numbers for January and February and March, at this point are almost meaningless because they are not accounting for the situation of the coronavirus that are put in there. So it will be interesting as we move along in here, what we see on the 10-year Treasury. Do we see that coming down to zero? That is more and more likely every day as we move along, and the quickness of how fast that could come down is speeding up. Well, that's what we have for you today. We look forward to speaking with you again. I thank everyone for saying hi down at the ICBA conference down in Florida this week. It was an enjoyable time, and I look forward to our next conference. Have a great day, everyone.